Hello, everyone, and welcome to Fidelity Next. I'm Emily Nuevo. Cryptocurrencies, the next revolutionary thing or just a flash in the pan? How do digital currencies actually work, and how are they changing the investing landscape? And what should young Canadians know about crypto and the foundation that underpins its impressive growth? Here to share insights on the future of digital currencies is Director of Research and Portfolio Manager Joe Overdevest and Equity Research Analyst Nick Belmer and Max Adelson. Welcome, everyone. So happy you could join me on the show today.
Thanks, Emily.
Thanks for having me.
Thank you.
Very much looking forward to our conversation on obviously a very exciting and popular topic right now. So just want to remind our live audience that we are taking in questions. So if you have questions for Joe, Nick, or Max during the show, just click on the Q&A icon you see on your screen and submit your questions that way. Joe, Nick, Max, before we deep dive into blockchain and cryptocurrencies, I wanted to talk about getting a career here at Fidelity because we field so many questions about what's it like to work at Fidelity and how you can get started. And I kind of want to frame it around one piece of advice you would give young Canadians and young graduates. I know you're all at different parts of your career, so what would you say to young people who want to start out in the investing and financial world? Joe, if I can start with you.
Thanks, Emily. I think the first is that, for me, is that you have the opportunity in front of you to educate yourself. There's a lot of students that will come to me and say, well, I have a similar GPA to everyone else, I have similar experience, how do I get ahead when it comes to getting that job? One of the benefits, especially of today, is there's so much on the internet, on YouTube, on social media to educate yourself, read investing books, and just to take that step further. That isn't just education in the classroom, but educate yourself really shows great initiative and puts you ahead of the game.
How about you, Nick? What would you say?
Yeah, I would build on Joe's point, and say that the great thing about stocks is it's open for everyone to trade. Whether it's real money or paper money, it doesn't really matter. I think what's more important for us when we look at candidates is that they can explain the rationale for why they would buy something, sell something. So my best advice would be, if you're interested in stocks, start investing, real money, fake money, but the important point is document why you're buying a certain stock, why you're selling it. Internally, we always have an investment thesis, 3 or 4 key points of why we're making a decision. It's a good idea that you can start keeping track of that early.
And Max, what would you add to that?
I would say that this is an industry that rewards being entrepreneurial and reaching out and leveraging the sources of information that you have. I think that also includes sources of people, of human resources that you might have access to, whether that's professors or people who've worked in the industry, or even people that you don't know that you can reach out to through LinkedIn. There are a ton of investment professionals who are always looking for creative, new, interesting ideas, and often those ideas come from young people, and you can see that through some of the very successful companies that we have in existence today.
Perfect. Great tips and practical advice there. So let's deep dive into blockchain and cryptocurrencies. Now, I probably can speak for a lot of young people on the line right now when I say that crypto is a very complex, it could be a very complex and confusing topic, and we've been hearing about it for several years now, but people are calling it revolutionary, and others say be cautious. So for someone who's looking at crypto for the first time, where should they start in terms of educating themselves? Max, if I can go back to you.
Well, luckily, there is a lot on the internet. Fidelity is a leader in this space. There's a lot of services and information from Fidelity Digital Asset Services. You can find them online. There's also a very public community who speaks about this. You can find forums out there. And also, there's tons of content in terms of YouTube, and then there's some dedicated websites that are related to the space.
Max, Nick, what would you say, and to add to that?
Yeah, I would just point specifically, it's a very fast-moving space. So I think one community, as Max was talking about, it lives on the internet, and a lot of it is actually on Twitter. Cryptocurrencies by nature are very open protocols. They're decentralized. They're open source. And so people kind of come up with new ideas, debate all the time, and a lot of that happens on crypto Twitter. So I would start looking into that, maybe following some accounts, and then you can see like the live developments and debates that are happening in the industry.
And Joe?
Well, you can start with the most technical, is the original white paper on Bitcoin, but because I'm last here, maybe I'll give you more of a, hopefully a fun one, is actually one of the better books is called Bitcoin Billionaires. And many of you probably saw the movie Social Network. Well, Social Network, it's based on book, and the writer wrote Bitcoin Billionaires, where the Winklevoss twins, of course, leave their episode with Facebook, take that money, and it shows in very, obviously, in some ways, entertaining ways, what did Bitcoin have to do to get here for mass adoption? Because they were big advocates of it, and some of the risks involved with Bitcoin and digital currencies, and how they had to educate people, how to educate regulators. And if you don't read the book, supposedly there's a movie coming out soon as well. But very good book, but actually, more importantly, it tells really of the ecosystem of what's going on.
Okay, great example. Joe, I want to continue with you, and let's break down some terms here, some terminology. Bitcoin, what is it exactly? Is it an asset class? People compare it to digital gold. Why is that?
Bitcoin is part of course, the blockchain technology, but Bitcoin itself is its hope is essentially is to be a digital currency and for the mass adoption, or at least for people to adopt in a general sense. Why it's still probably a little uncertain right now is the masses have not adopted it, because most digital currencies are still uncertainties, and we can get into that. But really what it is it's a currency that is not in a physical location. And so we're all used to, of course, dollar bills and a physical asset. It really is a digital currency involving, keys and passwords. And why it's not maybe totally adopted yet is because there's so much volatility. So people are actually, in some cases, think of it just as an asset class. I'm going to invest in this digital currency because over time it will grow in value against other currencies like the US dollar or Canadian dollar. But essentially, what it's trying to do is trying to be a store of value, just like a currency for transactions and to hold wealth.
Okay, a lot to unpack there in terms of it's not tangible, and it's sort of the currency of the internet. Max, if I could turn to you, and if you can explain sort of the blockchain technology behind it, because it's another kind of complex concept that many people have questions about. What can you say about it?
Yeah, I think to start out, Emily, you said it really well, which Bitcoin is often referred to as a native currency of the internet. It is extremely complex in terms of how it works, but I think developing a framework for it, we need to think about it in very simple terms. Most of our information in the world, whether it's data, whether it's corporate information, is stored in central repositories. They're stored in either hierarchical or relational databases. The blockchain is a process of distributing the database in multiple locations so that it's harder to change. It becomes almost impossible to manipulate that database. No single person can go in and change the record because it has to be validated by every single, it's called node in the network. And that's effectively how Bitcoin achieves this consensus process and why it has achieved so much trust among the people who really believe in it.
Right, and this actually leads to one viewer question here, which I want to get to because it's something I want to know too, in terms of valuing cryptocurrency. If you can't value it, how do you know if the current price is low valuation and therefore would make it an investment? Because it's, you hear of it, jumping like 100, like 200, like 600% of its value, but like, where do you start from there? Max, if you can.
Yes. We probably all have slightly different views on valuing cryptocurrencies, and I think every investor comes at it in a bit of a different way. The way I tend to think about it is that Bitcoin is a deemed scarce asset, and so we know its supply. What we don't know is its demand. We know that demand has fluctuated considerably over time. The supply curve is known, and so the demand in many cases is just a function of the dollars in circulation and the opportunity cost for those dollars to go elsewhere. If there are very compelling investment opportunities with high returns in other areas, it's going to suck liquidity out of the Bitcoin and digital asset ecosystem and towards other opportunities. If there are fewer opportunities, there's money that's going to flow into Bitcoin and others. So it's a bit of a stock versus flow type of arrangement.
And Nick, what were you going to say?
Yeah, I mean, I think the first thing you need to wrap your head around is that basically crypto, the value of digital assets, right? Can digital assets have value? And the reason why we often don't think of digital assets having value is because it's hard to create this scarcity in the digital world. But some assets are very valuable even if they're digital. For instance, I saw that the domain names cars.com sold for $800 million. So that's a digital asset that is scarce because there's only one cars.com, and it brings utility to the owner of that asset. And so, as Max said, built in the code of the Bitcoin, there is embedded scarcity. So I think that's one part of the genius of this. And then on the demand side, do users have derived value out of the network? I think the value that you derive from it is more akin to a social network, right? So if I'm the only user of Bitcoin, very little value. But if millions of people around the world kind of accept it as a store of value or a network to exchange value, suddenly I think that's how the value accrues to the network.
Nick, I want to continue with you because, in your research, you research financials and banks and digital currencies. They're not regulated. So what types of risks does this pose for banks?
I mean, I would refute a bit the claim that it's completely unregulated. First of all, I think the first regulator that had an interest in cryptocurrency, perhaps not surprisingly, was the tax agencies. They wanted their fair share. So, I mean, from that standpoint, cryptocurrencies are taxed as capital gains. So there is some piece of regulation there. In terms of the coins themselves, what we're seeing in the US, Bitcoin is deemed to be a commodity. So it's regulated by the commodity regulator. Some other coins, though, can be deemed securities. So that's where it gets tricky. Like the most recent case was Ripple, which was deemed a security. And the big importance of this is that when you're a security, you have much higher disclosure requirements, and the exchanges that list you also are held to a higher standard. The exchange is an interesting piece because cryptocurrencies are a completely different market structure than equities, for instance. If you want to trade cryptocurrency, you basically have to give control of your assets to an exchange. And so I think this is an area where the exchanges are quite lightly regulated, and because you have to give your control to the exchange, it may bring more scrutiny. So that will be an interesting one to watch. I'll conclude by saying I think the big picture here is we'll see how it evolves, because for now, Bitcoin at $700 billion market cap, it's still small in the scope of the world. I mean, it's like half of Amazon's market cap. If it does get much bigger, does it threaten government's monopoly on money? And I think if they think that is the case, that's when you could see a crackdown potentially. You can't shut down Bitcoin because it's decentralized, lives on the internet, but you can make it harder for citizens of a country to use it. So I think that's where we're going to see. But the irony is the more people adopt it ahead of a regulation like that, the harder it would become for a government to shut it down, and they would be more prone to see how can we live with it rather than close access.
Oh, interesting. More questions rolling in here, and one of you are asking, can you share your views on the similarities and differences between gold and Bitcoin and the value proposition of embedding Bitcoin into asset allocation for traditional money managers? Joe, if I can go to you for that one.
Yes. Gold right now, much like almost Emily, I like your question before, like how do you set the value of Bitcoin? I would almost ask, well, how do you set the value of gold? Because, gold essentially, it's shiny, it's nice, it's heavy, but it's a perceived value, really. Like, what I mean? And so, but it's amazing how over society, over time, we have a certain perceived value of gold. If I gave you a gold bar, you would be like, thank you. This is worth something to me, right? But I gave you, nickel, it'd be less. But the same thing with US dollars or Canadian dollars. Yes, they're backed by a Canadian or US government, but really it's just a piece of paper. But it helps with transactions because both sides have a perceived value of it. And so as Bitcoin would go into, like, say, asset allocation, or like an advisor or investor says, I want to own stocks, I want to own bonds, I want to own gold, that next decision is Bitcoin. It probably replaces gold to some degree. It's in that kind of bucket where it's an alternative currency. It's probably because you're negative on the US dollar or the Canadian dollar or currencies in general, and you want to own it potentially for an inflation protection hedge. But what's missing is probably, as we mentioned, is a few things before lots of investors do this, is more regulation, more education, and probably less volatility. I know everyone likes to see stuff go up, but for an asset allocator, when you're looking at Bitcoin, it blows up the risk models because there's so much volatility. If you're going to put it in there for what you think is alternative currency, which currencies generally don't move as much, it probably isn't at that level yet. But I think over time, as these things get resolved, you could see Bitcoin take share from gold.
And another question coming in here, I think, Joe, you mentioned stable supply and fluctuating demand. So what are the key drivers to shift the demand in the past few months?
I think the past few months is, there's probably just a number of things. Is first of all, just the education. It's more out there in the public. And as, again, we said before, is the more people adopt it, the more it can, it drives demand, because, again, what's very unique about Bitcoin, there is a limited supply at some point in time. I think number two, also what's happening is you see more of the rails accepting it. The rails, what I mean by that is not the rails that we think of, but the financial institutions we work with, they work on rails. They work on rails like PayPal, for instance. They work on other kind of payment processing systems. And if they accept, US dollars, Canadian dollars, your credit card online to purchase something, but also some online rails start accepting Bitcoin, which they have recently, that it increases definitely the use cases of it. So it's not just simply an investment for most people. Now it starts becoming an actual transaction tool for them. So education, some more rails adopting it. And as time goes, we'll see how this gets, further developed.
Here's a question for either Nick or Max, and one that I've always been interested in, and to do with security in your passwords and your private keys when it comes to Bitcoin. Given the consequences of potentially losing your password or key, is there really a future for this? Because, how can it all sort of be managed that way?
That's
Max,
a great question. I'll start with that, because when I started experimenting with cryptocurrencies, I tried a bunch of different methods to store them, some of which I unfortunately lost because I was leaving them on exchanges that happened to lose their own private keys, and therefore I wasn't able to access them. That was a very good learning experience. But there are multiple ways of looking at this. There are custodial providers that are emerging. Fidelity Digital Asset Services is one of them. These custodial providers have different levels of security, and they also have insurance, almost like deposit insurance for a normal bank. And that's where this market is heading towards. You can also store coins on a hardware. It's called a Trezor wallet. You can buy one of those online. We've also experimented with that too. So it's not the same as storing assets with a central custodian like a stock certificate or a bond certificate, but that whole industry itself is developing at this very moment.
So there is such thing as a crypto wallet, is there?
Absolutely. I'll let Nick talk a little bit more about that.
Yeah, essentially you have to hold cryptocurrencies in a wallet, and the wallet has two set of addresses, which is your public address, which is the one you would share with your friends if you want them to send you some cryptocurrencies, and then you have the private key, which is the one you need to validate transaction. The one person who holds the private key can essentially transfer value out of the wallet. So this is the one you really need to safeguard. It is digital, but it's almost like a password, right? But this is the access to your wallet. So you really kind of need to safeguard that. And when Max talks about custody solutions, is you're basically outsourcing the responsibility of safeguarding that private key to a third party that potentially has like more sophisticated security solution than you would have on your own.
Here's another question, what should students do and young people do when, playing with this idea of FOMO and fear of losing out, when there are so many ads and people pushing, young people to buy into Bitcoin? Like, how do they deal with that? How should they handle that?
I'll take that one, Emily. I think you have to watch Twitter, social media, Hollywood movies. They glorify the people that had a big success. I bought early when no one was buying. I ran it up. I'm the billionaire. It doesn't sell a lot of tickets. The person that bought and totally lost everything right out of the gate. So, we have to make sure our perceptions of the success is actually legitimate. What I mean by that is the odds often of buying the hot thing in general is actually very low. Doesn't mean it's not zero, but just really watch what you're buying. And also, are you buying on full education? I think, hopefully you've taken away from this. Max and Nick are, very educated in this subject. They do a lot of work on it. And even they will tell you they're probably in the early innings of what they hope to learn about this subject matter. And just even a few minutes, we've already gone over about all the risks. Like Google the people losing their key and all the sad stories, or they had an exchange and they lost it because that exchange or custodial was hacked, or they thought I'll buy not the Bitcoin, but I'll buy this small digital currency that no one's heard about, but it'll be the next big thing, and it never takes off. And so, just really watch, especially for students. I'm very empathetic to making sure you don't get swayed. You're very smart. Make sure you just get the bull and bear side before you get into anything, not just digital currency, but the next hot thing.
Absolutely. Educate yourself and do your research and do your due diligence, for sure. Another question rolling in here. How else do you see the financial services industry leveraging blockchain technology outside of the world of crypto? Nick or Max?
Right. Good. Yeah, I can kick it off. Yeah, thanks. Well, I think I'll start a little bit with where I see these public chains like Bitcoin and Ethereum fitting within the traditional financial services. I mean, in some way, I think they are a competitive threat. Obviously, very long dated, but what you're essentially building with these open protocols are kind of new rails, as Joe was mentioning, to store value, move value, even coordinate capital with the decentralized finance movement. So I think there are some profit pools that could be down the road disrupted. Maybe some of the most obvious ones would be kind of cross-border payments, which currently attract the very high fees. So that's how I see the potential disruption. Now, some traditional financial companies really embrace the change and adapt. We talked about the Fidelity's involvement very early on with custodial services. If you look at CME, which is like a futures exchange, they have launched contracts on Bitcoin or Ethereum. And we talked earlier about PayPal and Square in the US, allowing people to purchase or sell digital currencies. And they've actually said these customers that have a digital currency, sort of a crypto account, they tend to log in twice as much as the average. So clearly you see the more innovative companies here leading and kind of using that even to their advantage rather than as a threat.
Okay, we have a few minutes left. Yeah, go ahead, Max.
Yeah, I want to talk about something really simple and just ask the question of why do we have these intermediaries in the financial system? Because in theory, there could be a central bank issuing currency, goes straight to a population or businesses that exchange it amongst themselves. And yet we have these banks often who sit between transactions. I use a bank, I use Interac and my own bank account to send money to Nick and Joe and others. And a lot of the time it's because we need someone to be responsible for the information, be responsible for the data. And we trust that entity to be responsible with the data. When we enter into this decentralized world, we are taking more responsibility upon ourselves. And so it solves certain use cases. Other use cases, we'd rather have a central counterparty. And so maybe I'll bring up one, which is just a simple transaction. In our space, in the mutual fund world, There may be investors who want to switch between funds. They want to switch between fund companies, and they have to move through several central repositories to do so. We've looked at using blockchain to make that process more fluid, to make it faster, and also to remove a barrier of trust of who will deliver the funds as requested when they are demanded.
It's just this, we could go on and on about this topic, but we have a few minutes left, and I wanted to squeeze in a few more questions. This one for Nick and Max. What additional tips would you give someone looking to enter the field of equity research? We get a lot of questions about what a research analyst does. So what would you say to them?
In
Nick?
terms of what, I can start with what we do. If I can summarize really quickly, is that at least our teams are organized by sector. So currently I cover the financial sector. My role is just to become really an expert, kind of know the companies really well, know the big trends that are impacting. Just the emergence of blockchain and cryptocurrencies is just one among many trends that are impacting the financial service industry. And then take that knowledge to identify ultimately the best stocks to buy or to sell in my sector, and make sure those recommendations get into the portfolio managers' portfolios and have a very positive impact for clients in terms of delivering investment performance and alpha. So if that's the kind of the 30-second summary of our job.
Yeah. And Max, what kind of tips would you give to young graduates who want to jump into equity research?
I think the biggest thing is just a hunger to learn, to try, to make mistakes. Not unfortunately, I think our best lessons as investors always come from mistakes. We do our absolute best to deliver performance and alpha over time, and many of us have great track records in that regard. But the two things that we can really control over time are our effort and our attitude. And if you want to succeed in this industry, you've got to be willing to make some mistakes. You've got to be willing to try and embrace some new ideas. And a lot of victories come along the way when you embrace that attitude.
Excellent tips. Joe, I want to throw the last question to you as we wrap up our talk about digital currencies. One key takeaway you want to leave, young students about the future of digital currencies and where we're headed?
I think the punchline is it's early. And that's exciting. It's exciting that, we have all these things in front of us, like more regulation, more adoption. The ironic thing is maybe Bitcoin goes mainstream and the original adopters go, well, I don't want to own it if it's mainstream anymore. I want to own the thing that's not mainstream. But I think it's very early on. It is exciting for us as individuals, and hopefully that came across, is that, if I even told you a few years ago, there'll be this digital currency that will live on the internet, and no one will, no government will be able to touch it. You'd be like, you're crazy. And that's the benefit of the world we live in. It's very dynamic, and it does solve many issues the blockchain technology does. And so I think we're very early on, and there's going to be some big winners out of this, and also there's going to be some companies and some industries that could be disrupted as well. So if you love learning, this is a great spot where the funnel is just at the bottom.
Absolutely. Joe, Nick, Max, I want to thank you so much for joining me on Fidelity Next today. I feel like we've just skimmed the surface about blockchain and cryptocurrencies. I feel like there could be a part 2 coming up. So I thank you for your time today.
Thanks,
Thank you.
Thank you, Emily.
And thank you for watching and interacting with us here on Fidelity Next. Fidelity has great job opportunities available right now, so just check out careers.fidelity.ca for more information, and follow us on social media at Fidelity Canada, and let us know what topic or guests you'd like to see in future episodes. Thank you again for watching, and I'll see you next time on Fidelity Next.